Good morning, traders. It is Tuesday, the 27th of September, 2016. It's 8:01 a.m. Chicago time, 9:01 Eastern. Thanks for joining me again. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The news is the news. The key driver overnight was the first presidential debate here in the U.S. between Donald Trump and Hillary Clinton. Pretty interesting movement overnight. The market pushed up to a key profile level, the MC point of control, from July 14th till August 4th, and came all the way back. There were comments that the market was voting Hillary as the leader on that debate, but then but then here we are lower again, so must be saying the opposite. In any case, I wouldn't read too much into that. There are some products that have moved tremendously overnight, like the Mexican peso, um, and so on. But overall, the market's where it was when we closed yesterday and is resuming the normal auction. We're back through the scene of the crime. As far as what we're expecting for today, looking ahead, the key drivers today: U.S. Services PMI at 8:45 Central, 9:45 Eastern, and consumer confidence. And then the calendar is clear until 10:15 for 10:15 Central, 11:15 Eastern for Fed Speaker Fisher. He's a voter leaning dove. And then you have your auctions at 10:30 and noon Central. Let's take a look at what we saw yesterday, just to keep this video as short as possible. Here's what we expected yesterday. We were gapping down, trading 21.48 at the time of the trader bite yesterday, as you can see on here. And the expectation is for the market to make an attempt higher, and then to rotate down, with the overall key move being downwards in the direction of the gap, meaning initiative away from the gap. This, of course, is a stark contrast to what I discussed last Friday, Thursday, Friday, which was, let me see which day it was. It was the 23rd. If you go to the video, the 23rd of September, and go in 13 and a half minutes, I talk about how the market balanced below and gapped up gapped up on Thursday into the upper balance. And what I said was that if the market is expected to test lower, and if it does, we are likely to bounce up and then continue a little bit higher. So here's where I talk about it. I go over the idea that we're likely to test lower. Here it is. Test lower and then rotate higher right there. Rotate higher, and then what I said is if we take the Thursday's high out and push through that 21.74.75, then we're likely to see new highs. So it is not. I don't have a crystal ball. I don't have the ability to read what the market does. It's always an if-then type of situation, and I'm always open to whatever the market wants to do. And it's a very important skill to have in trading, not to sit here and inject what your requirements are on the market. You have to remain flexible. Let me turn down my news feed. So yesterday, looked for an open auction out of range, an attempt higher and a push lower. The primary target yesterday was 21.4150. The extended target was 21.36 or thereabouts. The secondary hypothesis was for an open auction, a test down into the 21.4450 to take out the overnight low, and then a bounce back up to 21.54, which was where we ended up overnight this evening. So that's how things were expected. Here's what actually happened. What actually happened is the market made a small attempt, a 1 point push higher to 2149, as opposed to opening out of range, pushing higher, and then dropping to the point of control to this level right here. It basically made a very, very weak attempt at the high and then pushed through by a tick. It took out the 2141, this 2141.50 by a tick early on. Early on, and then bounced right back through the mid, and then pushed up to make a neutral day yesterday. A neutral day early on. So we pushed to 2149.50, and then we dropped through to push to 2140, making us neutral. And then from that point on, really the only other opportunity that I saw that was clear is this grind up to mid, which is the way I'd like to see mids come into play, just to walk up to mid, and then we finally get a good rotation down, a strong rotation down, and then the last part of this trade is to look for a pullback for a retest of that low, and we got that later in the afternoon. So this was the big impulsive move was down, test mid, that's the entry, push down for the continuation of this particular move, and then on a shorter time frame, the push down, and then look for a pullback to the IB low and to this volume cluster here for continuation lower, and that took forever. It took all the way to the close to actually get the lower on the extension. But what we had yesterday is a profile that is skewed to the downside, closing neutral, having a neutral day, having tested the high of the first hour and the low of the first hour, moving the point of control below the IB low. This is an important fact. And then closing below the IB low. With all those pieces together, the expectation overnight is for the market to push lower, and it did to 21.33 1/4, all the way, so that until the debates, where the debates pushed us to the MC point of control. Anybody who's got the flex levels on their charts will probably saw this level come up. We pushed to 21.45. That was the overnight high, and then the market has sold off and is back where it was yesterday. Yesterday we closed right around the point of control, but we did extend. The normal auction pattern is for us to extend this lower, and then this profile essentially starts to stretch out and balance out. Of course, couldn't do that because the session ended, but that's what we normally expect. So, having seen what happened through the debates yesterday, it tells me that strength is on the short side. Still, a fair amount of volume traded yesterday. 323,000 contracts versus 210,000, which is what we would consider the most common volume for the overnight session. So there's a lot of interest in the market. There's a lot of interest in the market overnight. So here's the test lower, the continuation of this auction. This is the natural process for the auction to continue lower, and then this is all debate based. And then it finally touched out at the high. We have a weak high on the overnight session, and then we revisited the mid, retest, and then now we're continuing this move down. So we're taking the impulsive move down overnight and continuing it. The impulsive move occurred on the European session. So that's where we are. We're back to where we were before. Now, with that being said, now we got to go back to our profile here and look at what actually happened. So here's the lower balance. Here's the gap day. This day was last Thursday. Here's Friday filling back in. And the idea was Friday, Thursday with the gap up coming in and tying in with the upper balance. The expectation is to test the gap and then start to move back up, and that has not been successful. The market has actually given up the gap zone advantage that the buyers had up here. It's actually up here was given up, and now the sellers, given yesterday's gap down, the sellers were able to take the market back to the lower balance, and then in the overnight they tested up and they're back in the lower balance again. It looks like the sellers are still in control currently, which is the opposite of what I said on Friday. And you know why? Because I read it as it's happening. There's no way for me to control what's likely to happen, what's likely to drive these prices. All I can do is take what the market has given me and come to a conclusion that I can trade off of. Okay? So that's trading in a nutshell. As far as what's expected today, same thing as yesterday. I'm expecting an open auction. I'm expecting it to make an attempt and push into the prior day's value area. The value area from yesterday's valid. Expected to push into the value area, test at 2139.50, and then look to move down into the overnight low, and then potentially continue down for a retest of this point of control down here and through, and then I expect it to go sideways. So let me clean that up a little bit. The expectation for today, the primary expectation for today, for this to continue as it has been, and I'm looking for a responsive auction back up to 2139.50. I'm expecting it to run into resistance and then to push back out. I'm looking for a test of 2132.50. That is the point of control of the most recent. Area, the most recent balance, composite balance, and then look for a bounce up and then a continuation lower. Last week's low was 2127.75, and we've been one time framing up. This level here is fairly important to hold, for buyers to hold, the 2127.75. Okay, so that's your primary hypothesis right there. Test up, fail, find sellers, rotate down, and finish somewhere below the prior day's range. The secondary hypothesis is this continues lower, tests a lower first, and then finds its base around the MC point of control, and then it starts to move back up into 2139.50, pull back out of range, and then start to push a little bit higher on responsive buying, where buyers are seeing prices at an advantage and stepping back in to start targeting that gap zone above that we left yesterday. That's the secondary hypothesis. Again, if you're not clear about why these hypotheses fit in here, how do you use them, and what's the point of this, it seems very theoretical, right, when we're talking about hypotheses. I will be publishing a video here shortly that goes over the entire process of formulating the hypothesis and using it to put trades on with a strong hand. And that's the hardest thing to struggle with as you're learning to trade, or you're looking to be consistent to trade, is your ability to hold on to strong trades. So if I took a survey right now, most hands would go up that would say that they had the right idea, they had the right trade, but they closed it for a tick or they closed it for a loss before watching the market go exactly to what they expected the market to do. And that happens, that happens very often. It's very common. And so you create a hypothesis, and as long as your hypothesis is not violated, you stay in the trade. You keep your fingers off the mouse and let the market play out your edge for you. Otherwise, you're just find yourself going in circles over and over and over. Okay, so that's what I had for you for today. Hopefully, you're gaining something from this every day you watch it. If not, then just ask questions, reach out to me on Twitter. Let me know how I can make this easier for you. Good luck, and I'll catch you tomorrow. Take care.